Well, you may have noticed this week that the stock market has taken, I don't know, a pretty huge plunge, Courtney.
Plunge is a good word. Here with an update on the market amid the coronavirus fears, a certified financial planner and president of Shakiba Capital, Trevor Shakiba. Welcome to the show.
Thank you.
Before we get into this, we do want to talk about the market. I mean, we're talking about more than 83,000 people have been affected with coronavirus, COVID-19.
Yep.
And this is creating a panic, a worldwide, on the fears of maybe this becoming a pandemic. It's really taxing on the economy.
Yeah, absolutely. So just to give some perspective, obviously I don't really have much commentary on the medical side of things, but what's happening is that the second largest economy, China, has been at a standstill for 45 days or more. That's obviously going to affect the global economy and at least slow it, which is then going to affect earnings. So you've seen some companies come out and said, hey, we're going to miss revenue and potentially earnings coming up. That is why the market's been affected. And as I've always talked about, there's a lot of uncertainty. The market hates uncertainty, and that is why it's been so volatile.
And people tend to panic, Trevor, right, in situations like these, and they think, oh my gosh, should I sell everything I have? Should I go into my 401k and liquidate it? You say absolutely do not do either of those things.
Yeah, the answer there is no, and I was kind of joking here, unless you can predict the future.
Which no one can.
Which, of course, is, yeah, no one, not even Derek, right? So, yeah, try to take the emotion out here, and I know that's a difficult thing, but remember, the biggest impediment for most investors is going to be emotion because they make the wrong decision at the wrong time. And so I hear that line of thinking a lot, but that is wrong because you've got to get two things right here. Not just when to get out, but when to get back in. And remember, there's not going to be a magic bell at the bottom that rings that tells you, oh, get your money back into the market. It's very, very difficult, if not impossible, to do that.
I mean, we can't ignore it. I mean, we're seeing the signs everywhere, right, where the market is plummeting. And sort of what I think is, well, you know, it's going to eventually go back up, so why not let it sit there for a while and fester and just let it kind of do its thing, work its way out? So talk to me about what we really should be looking at when we hear these numbers.
Well, the most important thing is to keep perspective, which we're going to talk about here in a second. But what I always like to quote, and I've done this before, is look back at history. Any 30-year period historically has returned about 10% in the market. So 1980 to 2010, that's an example. The average individual investor compared to the market has done about 4%. The question is why? The answer is right now, most people are apt to panic right now, sell everything at the bottom, and then they do the exact wrong thing, and they get back in at the top. That's why there's such a huge difference between the average investor and the market. This too shall pass. Stay the course.
Also, Trevor, I think perspective is important because even though we've seen the market this week drop so much, it's dropped so much because it's been so high. And when you look at numbers from last year, wasn't the market up like 30% last year?
Yeah, and we talked about this last week. Last year was a great year where we had very little volatility. I said it wasn't probably going to be that way this year because it's an election year. Of course, I did not predict, you know, the coronavirus, of course. But, you know, what was really interesting is I went back and I looked at this. I looked at the SARS epidemic and Zika, and look, this isn't the exact same, I get that, but they were both down around 13% and bottomed at that point as well. So that doesn't mean that we're going to be bottoming here. It quite frankly might get worse before it gets better, but that's a good thing to look at and keep that perspective.
Is this also a good time to kind of really take a look at what you have, like your overall investments here, and if you haven't done that for a while, to kind of get a blueprint of it?
Yeah, absolutely. That is the one thing that you can do, is look, are you diversified? Is it time to rebalance? So again, coming off last year where everything just went straight up, now is the time to rebalance and make sure you have the right allocation. And what I mean by that is the right balance of equities, bonds, cash, your time frame to retirement, your risk tolerance. If you are losing sleep right now, you are probably not in the right allocation or have the right risk tolerance. And that's why it's so important to be diversified and not have everything in one thing or all your eggs in one basket.
And make a plan and have realistic expectations.
Yeah,
always.
You know, I talk about this every time, but if you're focused on the long term, retirement, education planning, you're not going to go crazy day to day. This is all noise. But if you're focused on the long term, you will be able to ride this out much better as opposed to, let me look at my portfolio every 5 minutes. You're going to drive yourself crazy.
It's a marathon, not a sprint. Trevor Shakiba, thank you so much for stopping by.
You bet.
As always, you can connect with Trevor by visiting ShakibaCapital.com.